Hello friends, in the last lecture we discussed about the simple average profit method for the valuation of goodwill. In that method we discussed about the various topics like normal profits, the various terminology like the normal profits, how to calculate normal profits. What are normal profits? Normal profits are the profits earned in the normal course of the business through the normal activities of the business. That are the normal profits. So what we will do is, from the profits of the past years, we will subtract any abnormal gains earned during the years. We will subtract any non-business income, right? We will add back any abnormal losses and we will add back any non-business expenses. I explained all the terms individually with examples. Clear? Then calculate the average profits. Average profits is the total of normal profits divided by number of years for which the normal profits are given, right? Then the number of years purchase. It means for how many years the firm will earn the same amount of profit because of its past efforts after change of ownership, right? Then how to calculate goodwill? Goodwill is average profits into number of years purchase. Very simple. The name itself says the simple average profit method. That means this method is very simple, right? So let's do some practical problems on this method. Let's see the problem number 1, right? It says A purchased B's business with effect from 1st of April 2016, right? It was agreed that the firm's goodwill is to be valued at 2 years purchase. How many years of purchase? 2 years. Number of years purchase is 2. 2 years purchase of the normal average profit of the last 3 years. The profits of the B's business for the last 3 years were 2013-14, the profits were 80,000 including an abnormal gain of rupees 10,000. Right? 2014 and 15, the profits were 1 lakh after charging an abnormal loss of 20,000. 2015-16, the profits were 90,000. Now read carefully, excluding 10,000 as insurance premium on firm's property, right? Not insured during the year because of oversight. Calculate the value of firm's goodwill, right? So let's see how to do it. First of all, first step is calculation of normal profits. First of all, we'll calculate normal profits. Right? We are given profits for 3 years, 2013-14. And 2015-16. Right? Let's see what are the profits. For 2013-14, it is given that the profits were 80,000 including an abnormal gain of rupees 10,000. Now for the normal profits, we will exclude this abnormal gain, right? So what will be the profits? 80,000 minus 10,000. So the normal profits will be 70,000 for the year 2013-14. Now let's see for 14 and 15. 14-15, the profits are 1 lakh after charging an abnormal loss of rupees 20,000. This abnormal loss is to be added back. So the normal profits are 1 lakh 20,000. Now for 15-16, read carefully. The profits given are 90,000 excluding 10,000 as insurance premium on the firm's property not insured during the year because of oversight. There was an insurance premium which was due this year, 10,000 insurance premium on the firm's property was due this year, but it was not paid during the year because of oversight. Oversight means we forgot it, right? We forgot to pay the insurance premium which was due on the firm's property of rupees 10,000. So this profit of 90,000, right, it should actually be 80,000. 90,000 minus 10,000, that is insurance premium which should have been paid, because we have to calculate the normal profits. This is an abnormal gain for us. 90,000 minus 10,000, right? So this comes to 80,000. So the total is 2,70,000. These are the total normal profits. Now we'll take the average of this normal profits. We'll say average profits is equal to normal profits divided by number of years. What are normal profits? 2,70,000 divided by 3. This comes to 90,000. So what will be the goodwill? Goodwill is equal to average profits into number of years purchase. What are the average profits? We have calculated as 90,000, and number of years purchase, it is given in the question as the firm's goodwill is to be valued at 2 years purchase of normal average profits. That means number of years is 2. So the goodwill is rupees 1,80,000. That's how we calculate goodwill under the simple average profit method. Right? First of all, we'll calculate the normal profits, then the average profits, and then the goodwill. Clear? Let's move to the next problem. It reads, A, B and C are partners in a firm sharing profits and losses in the ratio of 3:2:1. They decide to take D into partnership from 1st of April 2016 for 1/5 share in the future profits. For this purpose, the goodwill is to be valued at twice the average annual profit of the previous 3 or the 4 years. Average profits of the last either the 3 years or the 4 years, whichever is higher. Right? And the goodwill is to be valued at twice of those average profits. The average profit for the purpose of the goodwill for the past 4 years were 31st March 2016 48,000, 31st March 2015 30,300, 14 31,200 and 13 42,200. Calculate value of goodwill. Now first of all, we'll calculate the average profits for 3 years and average profit for 4 years. Here there is no abnormal gain and no abnormal loss. Directly we will calculate the average profits. That means we are given only the normal profits. Now we have to calculate the average of 3 years and average of 4 years. And the higher of 2 will be multiplied by 2 to get the goodwill, as required by the question. The language of the question is in itself is very much clear. Right? So let's see the solution. We have Now I'll calculate average profit for last 3 years, right, and average profit for last 4 years. Now last 3 years will be 2016, 2015 and 2014. What are the profits? 48,000, 30,300 and 31,200. So the total is 1,09,500. What will be the average profit? 1,09,500 divided by 3. This comes to 36,500. Now if I talk of 4 years, 2014 and 2013, profits are 48,000, 30,300, 31,200 and 42,200. And the total is 1,51,700. What will be the average profits? It will be 1,51,700 divided by 4. This comes to 37,925. Now the question says we have to consider the profits which are higher, right? Out of these two profits, we will consider the profit whichever is higher. So the higher profit is 37,925. So what will be the goodwill? Goodwill will be 37,925 into 2, because it is given in the question that we have to calculate the twice of the profits whichever is higher. This comes to 75,850. This is goodwill, right? Very simple question. The question says, first of all, calculate the average profits for the last 3 years and calculate the average profit for the last 4 years. Take the higher of 2. Whichever is higher, multiply by 2, that's your goodwill. The question itself says everything. Right? Let's move on to the next problem. Clear? Let's see the next one. A, B and C are partners sharing profits and losses equally. They agree to admit D for equal share. For this purpose, the value of goodwill is to be calculated on the basis of 4 years purchase of average profits. That means number of years purchase is 4. 4 years purchase of the average profit of the last 5 years. These profits were 2011-12, there was a profit of 30,000, then a profit of 70,000, then a profit of 1 lakh, then a profit of 1,40,000, and in the end there is a loss of 1,20,000. It further reads, on 1st of April 2015, a moped costing 20,000 was purchased. Scooty, right? Moped, a scooty. A moped costing 20,000 was purchased and debited to travelling expenses account, on which depreciation is to be charged at the rate of 25%. Calculate value of goodwill after adjusting the above. Now see, this 20,000 was debited to expenses account. That means the loss was increased by 20,000. There were some profits out of the income, if we subtract the expense, we reach at the profits. Now the expenses have been increased by 20,000. That means the loss was increased by 20,000. This should be reduced by 20,000. But depreciation was to be charged at the rate of 25%. That is 5,000 depreciation was to be charged. Right? So what we will do is, first of all, we'll prepare one working note. Clear? We'll say profits for 2000. One second. Profits for 2015-16. There was a loss of 1,20,000. Right? Now the cost of moped wrongly debited to traveling expense account. Now it has been debited to traveling expense account. That means this loss was increased by this expense. So we will add back this. Right? So what is the actual loss? 1 lakh. But one thing out of this we have to subtract as an expense, that is depreciation. Depreciation on moped at the rate of 25% on 20,000. That is 5,000. So this loss is 1,05,000. Earlier the loss given was 1,20,000, but the actual loss was 1,05,000 after rectification of errors. Now let's see normal profits. Right? We are given the profits from 2011-12, 12-13, 13-14, 14-15 and 15-16. We have profits as 30,000. Right? Then a profit of 70,000. Then a profit of 1 lakh. Then a profit of 1,40,000. And then there is a loss of 1,05,000 and not 1,20,000 after the rectification of this moped. Because moped was debited to traveling expense, our loss was increased by 20,000. So we add back this traveling expense. Right? Actual loss was 1 lakh, but the depreciation is an expense for us. Depreciation on moped at the rate of 25%. So we will deduct that expense 5,000. So the actual loss is 1,05,000. What are the total normal profits? 2,35,000. These are normal profits. Right? So what will be the average profit? 5 years. We are given the profit of 5 years, 2,35,000 divided by 5. This comes to 47,000. Now what is goodwill? How many number of years purchase? The goodwill is to be calculated on the basis of 4 years purchase. Right? So goodwill is average profits into number of years purchase, that is 4. It comes to 1,88,000. Clear? So this is how we calculate goodwill under the simple average profits method. First of all, calculate the normal profits, right? So these are the three practical problems that we have done on the simple average profit method. In the next lecture, we will be doing the weighted average profit method, right? I hope you all must have written these problems, all solutions, right? Still, if you haven't, I'm giving you a minute to write this.